Good evening, everyone. Hey, it is Shooter Scott Henderson, and it's January 12th, and we are going to go over swing trade notes. And please, at the end of our presentation, please do review our disclosures. Now, one thing that I'm seeing in this market, I find it to be a little conflicted. With breath waning, obviously some of our largest players are hesitant to add positions here. And to be honest with you, that could all be based on the perception that the Fed is not going to cut rates. Based on the minutes that they might need to do an about face because some of the additional pressure, et cetera. In a short sense, my thought is I don't think no matter what the Fed does at this next FOMC meeting is going to be good enough. That's sort of my take here. We get to that sort of lack of FOMO in the market. You can see the difference in the position sizes, where the bids are, where the call options are, where the put options are. And, we really are in an interesting spot because it's clear the pros are using this rally to quietly sell while retail investors are buying the dip. How we end, I don't know until selling picks up a little bit. Get a little spook in the market. That should test retail buyers, but I don't know that that's a guarantee here. Trend support is holding. We've got signs, like I covered in our rare video for our week ahead video. We've got some signs that both the NASDAQ and the S&P 500 will be bullish going into this week. That's my thought. Obviously being earnings week, banks should do, fairly well. But let's look at what our performance was last week. It was a light week. There's not a lot of FOMO out there, which is the crust of my swing trading. I don't have the volume, the flow that gets me excited. I don't want to put the risk on, and that's sort of where I'm at. So what we did as kind of a hedge, and I do this, 3, 4, 5 times a year, when I have an idea of where we're going to be position-wise, as far as sentiment, momentum, breadth, etc. Since I saw all of this waning, when I cut my Joby, my Mobley, and my Tesla calls quickly, basically I was out of my long. So we ended up with a net about 276 for the week. Now that did not include the premium sales. We had about another $1,200, I believe, in premium that we sold between DTM, Walmart, and Micron. So obviously that pretty much made our week. Earnings this week, I like KB short here. We've already come off quite a little bit. I've got it in our setups here, and I'll go over it in a second. I like the banks. I didn't necessarily like the counts on JP Morgan, Chase, and Wells Fargo because they were toppy, but I did like BlackRock. So, we've got that in our look this week, and I want to spend a little time on that. It's a complicated trade. And then Taiwan Semiconductor Thursday, I've got that in on our list for this week. May jump in on United Healthcare, may take State Street Bank based on how earnings do Wednesday. We might add that into the mix. And then we also have a interest in the NASDAQ long, really maybe to 530, I believe it's 513, in that range. Not a big jump. But now, one thing I did this week is I updated our technical ranking to include the ADX and candlestick patterns that we threw in there. And then also we added a trend alignment in there, EMA moving average. So our total point score via the AI now is 64 points. And I'll go through that as I go through each individual name. But let's start off with BlackRock here. Now, BlackRock to me has really, it's a two-tiered trade here. Let me just jump in and bring in so we have this T1, T2, T3 on the 30-minute count. So I'm looking for, basically it's a 50% back trade. And then on the weekly, we also have a T1, T2, T3 way the heck up here, because if this keeps going, then obviously we'll keep going. So we want to look at this as a two-tiered trade. So right now, I'd like it better down at 934, but with earnings this week, I don't know that it gives. So the challenging part is how big we want to be with such a short time frame between now and I believe it's Wednesday. Check that. Yeah, it's Wednesday before the open. So basically we got 48 hours going into this. That's a little challenging. So I think a quarter position size into earnings. I like the 1,000 calls just because of the premium difference. If we don't get the move, there's not going to be as much of a gain, but at the same time, there's less risk on the table. Or you could take the conservative approach and just sell March 850 cash secured puts, which is well below where we think our better entry might be. That way we're sort of capitalizing on earnings. So that's my thought on BlackRock. Now let's look at KB Homes. Now, there's a number of reasons why I like this for continuation. First of all, the permitting has been waning for weeks, and we got a bear flag right here down on this flush. So when I see a bear flag, the first thing that I look at is equality. So I'm always thinking ABC. So I'm thinking on this, even though we're measuring an A here, B, internally we have an ABC. We had an ABC here and we have an ABC here. So I'm thinking of this as A, this is maybe our B, and then we could get a C way the heck down here maybe to $45. So I think there's a possibility if earnings are rough on KB, we could get a total catalyst to the downside. On the other hand, mid-quarter, we started seeing more inventory. So I think that's something we're going to hear from all the home builders here. Now I'm being preemptive. Here again, I'm still at a half position size on any of my entries just because I haven't seen the FOMO yet to make that change. And to be honest with you, my win rate and my gains haven't got above 70% going into the first of the year to justify that structural change in how I trade. And basically, I just use a formula. That's what I stick to. So right now, my swing target is 60.29, and we'll see whether or not we can break this 58.05. And then there really is no support down here until we get back down to like $48 from the upside. So this could be a decent move to the downside. And here again, just manage your position size, close above, right? 64.73. It's probably going to, earnings probably was doing well. Then we might want to try again back around 100. I don't think it gets back above 69 with the circumstances going on with permits, because honestly, future valuations is why a stock is valued. And since we've already come off, this could literally be a round trip stock. I mean, we could be back at $30 if the numbers are rough. So that's my thought there. All right, let's take a look at Taiwan Semiconductor. So about the only play for me because of the premium is a February 215 call. Earnings are Thursday. So maybe risk 205. So I'm like risking less than $2. We break below that. But I think we run into earnings. Now, structurally, one thing that I'm doing as I'm spending more and more time on TradingView, I'm putting more of my view of a chart than I was with MotiveWave, just because it's forcing me to do it, because it doesn't have the scanning features where it sees the different legs, etc. So I see this wave 2 here that's projecting down on 194 as an ABC. So this is a right to trend support, was shallow of it. We got a nice wick up off of that. So we had complete seller exhaustion there in my book. And what do we get after that? A nice candle up. So I'm thinking we get this next nice candle up as well. So my T1 target is really 212.60, and then my T2 target is up around 222.20, and I see no reason that shouldn't change. Now I want to jump out here a second, and I want to look at the TradingView chart. Now, reason I like the strategies and I've spent weeks going through strategies to try and find what was existing. And still, I don't have my pin strips working. Somebody who works on pin strips and actually can get them to work, let me know. DM, because I'd like to get my strategy in play, and I can't get certain facets to it to work at all. So, all right, well, we're at a crossroads here. T1 to the upside is maybe 212. T2 is maybe 215. And, I don't know that we break down here, but we could. I mean, this could be a continuation. This could be our impulse corrective. So this is A, this could be a B, which is what it's telling us, and then the C heads down lower. The question is, do we get 50% back or higher? And I think we do. I think we get up to that 212.6, which is really where my thought is. If we get a roll in RSI or the MACD histogram or the Elliott wave histogram here, basically this tells me there's a bottom. This tells me it's topping. Right? When we're looking, by the way, I love this histogram on the MACD. To visually top, it adds to, so when I have a collective, I have RSI divergence, I have MACD topping pattern with a histogram, and I have the Elliott wave histogram topping. What do I have? I have 3 different indicators that show me direct confluence to the move. It's a no-brainer, plug and play. So that's my thought here. That's what we have for this week, folks. Great trading. And one other thing I'm going to flip over and take a peek at real quick. Now, this is the NASDAQ. This is a 30-minute chart. Now, in rare, we chased this 506 to, we ended up pulling out right around 510, so we got about $4. I was hoping it would get into the gap and get some more euphoria, but it didn't. But structurally, I see it coming out of that. I see this being a higher low here. I'm just looking for a reason on the shorter time frame to jump back on board, so I'm going to wait for the opening range, look at it again. Now, we did do TQQ calls, and the main reason I like those is because the premium is less and you get a little more time. So it allows you to go deeper. If I'm looking for a trade where we're going to rally back, through the 16th, I don't necessarily want to trade my weeklies. I don't really like trading the ODTs, the daily expiration, obviously because of the risk, but obviously it gives you the best gain when you're chasing something on a shorter time frame. So my interest is a swing long here, but I also want to jump out to the 4-hour for a second on this and sort of give you a visual of what I see at this point. Now note, on the 4-hour, the strategy does not see any downside targets. Now, and it puts us around January 31st, around 534 from where we are. Now, one of my goals this year was to start trading the 30-minute, the 4-hour, and the weekly in swing trade notes, specifically on the NASDAQ. And the reason being is the success rate that I have with them on my day trading and my scalps. I typically don't spend a lot of time on the swings, but I wanted to put more energy into that this year just because of the success rate, because I averaged more than a 78% win rate just on the NASDAQ in 2024. And obviously we would like to provide that as a benefit to our members in Rare. So of course, if you're not a member, there's a number of promotions out there. Please reach out, come join us. We'd love to see you in chat. But that's what we have for this week, folks. Great trading. Until next time.